Tim Cook's Financial Masterclass, the investment strategy behind Apple's trillion-dollar CEO. Apple is a household name today, but when Steve Jobs passed away in 2011, the world doubted whether Apple could survive without its visionary founder, a quiet, disciplined man from Alabama who took over the reins and not only kept Apple alive, but turned it into a $3 trillion empire. How did he do it? And more importantly, what financial and investment strategies can you learn from the man who rebuilt Apple into the world's most valuable company? Stick with me until the very end, because Cook's approach to money, leadership, and investment holds lessons that could transform your financial journey. But before we begin, make sure you smash that like button, subscribe, and hit the notification bell. We post deep dive breakdowns on the money strategies of the world's most influential people every week, and you don't want to miss them. Humble beginnings, big discipline. Tim Cook was born in a small Alabama town. His father worked at a shipyard, his mother at a pharmacy. No family fortune, no flashy lifestyle. But here's the key. Cook grew up with discipline. That discipline became his greatest financial weapon. While many billionaires are known for risk-taking or flamboyance, Cook built wealth through patience, consistency, and long-term planning. Lesson: you don't need to be loud to get rich. Sometimes the quietest, most disciplined approach wins the biggest prize. Joining Apple, the power of equity. In 1998, Tim Cook joined Apple when it was struggling. People forget, Apple wasn't always a trillion-dollar company. Back then it was close to bankruptcy. But here's the genius. Cook didn't just take a salary, he negotiated equity. Stock options that would grow as Apple grew. Today, Cook's net worth is estimated at over $2 billion. Largely because of the Apple shares he accumulated. Lesson: don't just work for money, work for ownership. Equity builds fortunes, salaries just pay bills. Operational genius: investing in efficiency. Cook isn't a designer like Steve Jobs, he's an operator. He built his wealth by mastering something most people overlook: supply chains. By streamlining Apple's production, reducing waste, and negotiating global deals, Cook saved Apple billions every year. And here's the takeaway. Financial success isn't just about making more money. It's also about controlling costs and maximizing efficiency. Lesson: in your own life, think like Cook. Cut inefficiencies, reinvest savings, and let compounding do the rest. The iPhone growth engine. When Tim Cook became CEO, critics said he could never replicate Steve Jobs' genius. But Cook's strategy wasn't about reinventing the wheel, it was about scaling it. He turned the iPhone into not just a product, but a global ecosystem. Every update, every new model, every supply chain move. Cook optimized Apple's crown jewel to bring in record profits. Lesson: you don't always need to invent something new. Sometimes the greatest investment strategy is maximizing what already works. Services: the diversification masterstroke. Cook understood one thing: no product lasts forever, so he diversified Apple's revenue streams. He built Apple's services business: App Store, Apple Music, iCloud, Apple TV Plus subscriptions. Today, services generate over $80 billion annually for Apple. Lesson: never depend on a single income stream. Diversify into multiple cash flows to protect your financial future. The cash hoard strategy. Apple under Tim Cook became famous for its cash reserves. At one point, Apple had over $200 billion in cash, more than most countries. Why? Because Cook understood that cash is flexibility. It allows Apple to acquire companies, invest in new technology, and weather financial storms. Lesson: in your own finances, build your war chest. A strong savings and emergency fund gives you the power to seize opportunities while others panic. Massive share buybacks. One of Tim Cook's boldest financial strategies is share buybacks. Instead of simply sitting on cash, Apple spends billions buying back its own shares. This reduces the number of shares in the market, which increases the value of the remaining ones. Since 2012, Apple has spent over $500 billion on buybacks, making it the largest in history. Lesson: even if you're not a corporation, the principle applies. Reinvest in yourself to grow long-term value. Playing the long game. Cook is not a short-term thinker. Every move he makes is about decades, not months. Whether it's investing in new product lines, expanding into India, or betting on renewable energy, Cook plays the long game. Lesson: stop chasing quick wins. Build a strategy that compounds over years. Wealth is a marathon, not a sprint. Long game, stop chasing quick wins, build a strategy. Environmental investments. Tim Cook has committed Apple to becoming carbon neutral by 2030. At first glance, this might look like just a PR move, but behind the scenes, it's a financial strategy. Green investments reduce energy costs, attract loyal customers, and future-proof Apple against regulation. Lesson: smart money isn't just about today. It's about aligning with future trends before everyone else catches up. Global expansion, betting on emerging markets. Tim Cook knew that if Apple wanted to keep growing, it couldn't just rely on the US or Europe. That's why he pushed hard into emerging markets like China and India. He negotiated with governments, invested in local supply chains, and positioned Apple as a global luxury brand. Today, these markets contribute hundreds of billions to Apple's revenue. Lesson: don't keep all your financial eggs in one basket. Think global. Seek opportunities in new growing markets where competition is still low. Patience with innovation. Unlike Steve Jobs, who was known for sudden, dramatic product launches, Cook is patient with innovation. Look at Apple Watch, AirPods, or the transition into AR and AI. He doesn't rush to market. He waits until the tech is polished, then dominates. This patience ensures Apple avoids costly mistakes. Lesson: in investing, patience pays. You don't need to chase every trend. Sometimes the smartest move is to wait, observe, and strike at the right moment. Strategic acquisitions. Cook doesn't spend recklessly on acquisitions. Instead, he makes targeted buys that strengthen Apple's ecosystem. Examples: Beats by Dre became Apple Music Foundation. Shazam integrated into Apple services iChip startups, powering Apple Silicon chips. Small, smart acquisitions create massive long-term value. Lesson: you don't need to buy big to win big. Look for strategic, value-adding opportunities in your life and business. Focus on ecosystem, not just products. Cook's biggest strategy shift was this. Apple is not just a company selling gadgets. It's an ecosystem. iPhone connects to AirPods, syncs with MacBook, powered by iCloud, paid through Apple Pay. This closed-loop ecosystem locks in customers for life. Don't just chase one-time sales. Build systems that create recurring income and customer loyalty. Quiet living, big wealth. Despite being one of the highest-paid CEOs in the world, Tim Cook lives a surprisingly modest lifestyle. He doesn't flaunt cars, mansions, or yachts. Instead, he invests quietly and focuses on long-term wealth growth. Lesson: real wealth isn't about showing off. It's about financial freedom, security, and impact. Technology investment philosophy. Cook doesn't just manage money. He invests heavily in future technology. Apple spends over $30 billion annually on R&D. That's AI, chips, augmented reality, and healthcare technology. Cook knows innovation is the ultimate compounding machine. Lesson: in your own financial journey, always invest in skills, tools, and technology that will stay relevant in the future. The power of partnerships. Cook is a master of partnerships. From working with IBM to entering the Indian market with local telecom companies, he uses partnerships to accelerate Apple's growth. Instead of going alone, Cook leverages alliances. Lesson: wealth isn't built in isolation. Build strategic partnerships in business, career, and even personal investments. Risk management mastery. Cook is not a gambler. Every financial move he makes is about risk management. He balances innovation with stability. He invests heavily in secure supply chains, spreads Apple's bets across multiple products, and always keeps that cash cushion ready. Secure supply chains, multiple products, cash cushion ready. Lesson: the best investors aren't risk avoiders, they're risk managers. Always calculate before you leap. People investment. Cook believes people are Apple's greatest asset. He invests in top engineers, designers, and managers. He creates programs to retain talent, because innovation only happens with the right minds. Lesson: money isn't just about assets and stocks. Sometimes the best investment you can make is in people and relationships. Long-term stock growth. Under Tim Cook, Apple's stock price grew by more than 200%. But here's the key: it didn't happen overnight. It was a decade of consistent execution, patience, and reinvestment. Lesson: if you want to build wealth, stop day trading. Start thinking like Cook. Long-term compounding beats short-term speculation. Ethical philanthropic wealth use. Unlike many billionaires, Tim Cook has pledged to give away his fortune. He's committed to philanthropy, supporting education, privacy rights, and global health. Lesson: wealth is a tool. True financial mastery is not just making money, but using it for impact. Privacy as a financial strategy. Privacy isn't just Apple's philosophy, it's a financial weapon. By positioning Apple as the champion of user privacy, Cook builds trust, and trust drives sales. Lesson: in your business or financial life, build on trust and integrity. Money follows credibility. Betting on health wearables. Cook sees the future of wealth in healthcare technology. Apple Watch isn't just a gadget, it's becoming a health monitor, capable of tracking heart conditions and health data. This positions Apple at the center of a trillion-dollar health industry. Look for industries on the rise: healthcare, AI, green energy. Investing early could mean exponential returns. Leading with vision, not ego. Unlike many flashy CEOs, Tim Cook rarely puts himself in the spotlight. His focus is always on Apple's vision, not his ego. This humility attracts trust from investors, employees, and customers alike. In your financial journey, don't chase status. Chase value creation. Wealth naturally follows. So what can we learn from Tim Cook's financial and investment strategy? Discipline beats noise. Diversification secures the future. Ownership creates wealth. Long-term patience compounds returns. Integrity and vision build lasting empires. Cook took Apple from doubt to dominance, and his lessons apply not just to billion-dollar companies, but to anyone who wants to build lasting wealth. Now I want to hear from you. Which of Tim Cook's strategies will you start applying in your own life? Drop your answer in the comments. And don't forget, hit that like button, subscribe, and share this video with someone who needs financial inspiration. Because just like Cook, your financial future is not about where you started, but the strategies you apply today.